Remember the fat man and little boy? How appropriately named. More about that and much more when we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great opportunities and ideas for you throughout the show. Well, the stock market finally saw some serious selling coming in this week. Stimulus came from President Trump and North Korea, Kim, going nose to nose. The stock market was really just ready. I mean, it was really truly overbought, having gone for the third longest period of time without a 5% correction. And it's just was plain time to get some kind of a pullback. So the stock market was really just ready, and nobody really believes that there is a nuclear war coming here between the U.S. and North Korea. Kim and Trump both pretty full of themselves, and you can't really believe that either of them is going to want to get knocked off their high horse. And of course, when a U.S. territory like Guam is threatened, well, it's no joke whatsoever. And you never know when the egos of narcissists are going to get the best of them and somebody starts shooting missiles. So, of course, that has investors on edge. And of course, President Trump, well, he's got a short fuse. The answer really is China, and whether or not China can threaten to punish that little boy if in North Korea, if he doesn't step down, because China really should have some serious control over them, and it is really up to them to stop this problem. The stock market down for the week as the Russell and the Dow Jones Transportation Index had warned about problems coming in here with a serious deterioration having gone on the previous couple of weeks. And we mentioned that. We showed megaphone tops being formed in those indexes. And you can go back and watch those videos. We have them posted up on YouTube if you want to refer to that. So the S&P 500 was down some 1.5% for the week. With all that noise going on and scary stuff, you'd think it could be more. It's only 2% down for the off of its all-time high. So certainly not a correction by any standards, though that still might be coming. NASDAQ down about 1% for the week, and both of them hit our targets for the week almost right spot on, so we're excited about that. We'll show you that a little later on in the show. Russell continues to be the weakest, down 3%. One of our indicators, which is called the option bias indicator, we'll show you that in a couple of minutes, is at what we call an N1 orange. What that essentially means is that it's extreme oversold and likely to get a bounce. Dow Jones Industrial Average only down about 1% for the week. Let's take a look here as we look at our 60-minute chart for the S&P 500. A little different view of this than we normally show you here, as we've made a little bit of a change of the format of the show. So you can see here when you look at this that the gray area is the area of overnight, and the white area is the trading during the trading session. And here you could see Monday and Tuesday, not a lot going on here. Fed Bullard comes out and lifts the market. You can see right in here as he says no need to raise interest rates, and that of course the markets like, because they like to see all this money getting printed. Then came Apple jumping 3 points on Tuesday. It moved up to a record recorded 161.83, but then saw Thursday almost a collapse where it was down over 5 points. And the financials popped on what looked like higher rates until late in the day when POTUS came out and threatened North Korea with fire and fury over the North Korea's nuke advancement, and word that they have a small one that can fit on the nose of a missile, and that got everybody upset. The market started to sell off, as you could see right in here. Markets weaker overnight on Wednesday, and then Apple goes positive again and lifts the market. You could see that in here. It was kind of a zigzag day as the market closed up on its highs, and the shorts were writing me and saying, holy cow, can't they ever go down? Gold and the bonds jumped, however, as a flight to safety really started to tell us that there was some issue going on. And then here, world markets started to decline overnight on Thursday as really North Korea threatening Guam again, talking about their plan to shoot 4 missiles at it, got the markets falling. It collapsed in here as we saw huge declines, the biggest decline we've seen in quite a long period of time, some months. And Dillard's came out with a loss. Macy's warned, and that really brought a collapse in the retail stocks, which were already collapsing anyway. And then on Friday, you could see we get a modest bounce as Apple again is leading on the upside. CPI weaker, and year over year is only up 1.7%. Who cares? So what? I mean, all this focus by the Federal Reserve, if you ask me, is a little bit ridiculous when you see that. And what's the difference between 1.7% and 2%? Are they going to keep us at 1% interest rates and keep a $4.5 trillion balance sheet because we're 0.3 off of their inflationary target? And it's sick, if you ask me, certainly sick. But forget about that. Let's talk about the bond market right now as it moved up in a flight to safety and just over 1 point for the 30-year on the upside for the week. The 10-year yields fell about 7 basis points to 2.19% on the 10-year yields. Still incredibly low. The dollar edged lower as, of course, interest rates fell. So they believe that as interest rates go down, that the money just doesn't come into the U.S. because, well, it wants to go somewhere where it can earn more money. There isn't very much of that out there, and it's really extraordinarily weak for the dollar, and the bounce we're looking for is very elusive, so I can't say anything great about the dollar. We're still looking for a bounce into September, and it is really crazy weak, and we think that the last quarter of this year has got the chance for a dollar collapse, and for our members, we're going to talk more about a big picture and gold in the dollar in the coming week as we prepare a video for that. So gold soared $30 for the week. That's about 2.5%, but that's nothing because silver was up 80 cents, and that's about 5% on the week. These are extraordinary moves, especially for silver. Platinum also moved up big, and short-term platinum gives us a very overbought signal. Also, oil down about 80 cents on the week as OPEC tries to hold this deal together, but it really seems like that deal is in jeopardy as we keep seeing news come out that somebody is cheating, and then the export numbers were down for Saudi Arabia, but then they were up for Saudi Arabia, and it could drive somebody crazy listening to this background news as oil pops up and down between $48 and $50 back and forth. And I think that the patterns suggest we're going to see another pop over 50 before you know it, but it's also a market that isn't really able to get another impulse to the upside after it had been quite strong. More, we think a bounce, the bounce today that we're seeing in the stock market is not likely to hold. And it's only a modest bounce. S&P's up about 7 points here at midday, and the NASDAQ up about 45. We think that that's going to give up into early part of the week. We're going to show you more about that in the stock market and all of the 5 major markets in a special that we're doing as we shift around some of the ways that we're doing this show. So you're going to see all of that towards the end of the show. And right now, you're going to learn more about Level 3 and me. So who is Slim? I'm going to give you a little bio right now and also an introduction to what I think is an amazing service for traders at all levels, traders of all styles. Well, I've been a trader for 43 years. I started trading at the CBOE in 1974. That was even before there were any put options. We only traded calls. Also was a member of Chicago Board of Trade, where I traded in the bond pit, bond option pit, corn, soybeans, and Chicago Mercantile Exchange, and of course in the S&P pit when the big contract was traded. So I've been in the markets for a long period of time. In fact, 1984 is when I moved up to an office and became one of the first screen traders. So I had a lot of experience on the floor and off the floor. 1996 was a time when I really started to work on me, and I became a personal growth facilitator and have worked with just countless people and coached countless people in the markets. What I do is bring to you all of my experience, all of the work that I've done in the markets and learning analysis and in the personal area, and combine all of that experience in the 9 video categories that I bring to my members every single week. There's amazing depth in there, great learning for people of all levels, all the way from the technical side to the personal side, all about styles and strategies and plans and strategic approaches, and there's just so much there for you to see. And especially as I go through teaching analysis the whole time, I illustrate my cycle analysis, and with tons of people that are members that are learning that also. So what I want to show you is our level 3 rankings and trade setups and option bias table, which includes all of our videos if you become a level 3 member. I'm going to quickly take you through this table so you can get an idea of what we're doing. So everybody receives this table updated every single day with a recap in the mornings of any changes that we made. So quickly want to show you what goes on in here. We have a proprietary studies, combinations of redundant studies that give us a sense for momentum and cycle rhythms. Our long term, that's LT, is a few proprietary indicators that look at monthly charts. So we want to find the primary monthly trend. And we show that as green, yellow, or red. You can see that right in here. As actually, these top few are all in a long-term positive momentum. Now, the intermediate term is made up of momentum studies and our cycle analysis. So if you happen to be an investor type or, longer holder, you're going to look at both of those. I mean, when you have a situation where, like in Caterpillar, where you have long-term positive and you're in P3, which is the highest rating for the cycles, well, the probabilities are very strong that it's going to be moving to the upside. And even if there were minor corrections, it probably then would only be minor and moving to the upside again. Now you have situations like Disney, DIS, where right here it's showing you, well, there's a long-term uptrend, but the intermediate term has turned down, so there's some worry in there about the condition of it for longer-term traders. So you can see how that works, and we actually have this in there for 56 of the best traded high caps, and also the indexes. As I come down here, you could see SPX and NDX and all of the futures that we look at. So we do this for 80 symbols. These are the best traded symbols. You don't really need anything else at all. So you could see this was updated on 8/11 for actually this morning when this is recorded. So for the swing trader types, that would be looking at the intermediate term, which is our cycle analysis, and the short term, which is also a combination of proprietary short-term indicators. So when you have a condition like in Amgen where it was -1 and the cycle intermediate and negative right over there, you have that condition that is looking like, well, it was going to decline, and it's set up. And we actually put in a short-term setup right in here. And when it's grayed out like that, we actually removed it because it worked so well so quickly in actually 8 days. That was dated on 8/3. You can see here on Intel, right over here, that this one is at P1 in green. It actually had given us a very overbought condition that reversed to positive. I'll tell you about that in a second. So we had a position on, and there was no pullback, so we removed it. It wasn't any kind of a loss in there. It just simply didn't work, and the time passed by, so we essentially removed it. So that's what we do. Now, the last one in here is just an incredible one called our option bias ranking. And what this is made up, again, is proprietary indicators that give us a sense of a combination of the short term all the way through intraday readings that tell us the likelihood of an advancing period, a neutral period, or a positive period. And when it gets to P1 orange or N1 orange, those are very likely reversals. As a matter of fact, you can see here that Starbucks right over here is an N1 orange, which means it's at an extreme oversold condition and a reversal's pending. Now, we're running about 68% excellent trades to put on during those or excellent entries during the N1 and P1 period. So if you were an option trader, your option bias would be contrarian, and that's one of the few contrarian things that we look at in there. If you were, in the case of, let's say, American Airlines, let's look at that, you can see in here that, well, we had a slightly negative intermediate term. We had a kind of a neutral short term, but the option bias indicator all put together was severe to the downside. And you've probably seen that for the last weeks, American Airlines has been quite weak. Amazon turning quite weak. It's actually turned negative on the intermediate, and that has been moving down pretty significantly. These are great directional indicators. Bristol Myers has been super strong, and that one you can see is at P2. So these are just fantastic. Take a look at Disney. Even though it's positive on the long term, everything about this has been negative on the intermediate and short term, and you've seen the stock absolutely fall apart. So this is just an example of how all of that works. It's just a huge amount of information on one page for everybody. Our long-term rankings, our intermediate-term rankings, and our short-term rankings, and our option bias rankings. Put that all together, and you just have an amazingly huge amount of information all on one page on the 80 best traded symbols. And you can have that every day from us by becoming a level 3 member, and you will also get all 9 categories of our videos, of which there are 4 days of new videos every single week. So this is just, I think, important for you to subscribe, and it supports us and allows us to keep bringing all of this great information. So if you want to get a look at this and try it, well, you can have our 1-month trial, which is only $43. It's half price. You can look at all the videos for a month, get all of this information in the table for a month, and I think that you'll find it just fantastic information. $43 to try it out. How can you not? And it really supports us. So send me an email, slim@askSlim.com. Ask me for the level 3 trial link, and I will send that to you. Thanks a lot for listening. All right, best and worst stocks for the week. Now that we're past the earnings season in here, just some dribs and drabs left to come. There wasn't all that many big moves, even though the stock market was down. We would call it significantly based on the recent history. Some of the biggest movers of the week were in the retail category, moving in two different directions. The biggest upside gainer of my 300 plus stocks that I review all the time was Coors. Take a look here at this Coors chart, and I'm going to say I laugh at this. In other words, why do I laugh at it? Because, man, it's been a giant move. 23% on the upside. And all I can say is, are you joking? I think it's a sell right over here, and I think that investors are going to say, man, we're lucky to get this kind of a price. Well, their earnings were good, and their guidance was strong, and also their pricing was strong on purses. So the stock gets a big jump to the upside. This is just out of whack, if you ask me. That is a very important short-term resistance confluence. In other words, there's several different resistances that all line up in there. I doubt that it's going to be able to get much more on the upside. What's really cool about this is based on our cycle analysis, you can see in here, and we have the timing spikes up here. These two right over here, these blue ones, point to an important low coming at this time, and you could see it was almost a bullseye from the point that we expected the low to come. We didn't dream it was going to be able to get this kind of a move on the upside. I think it's excessive, and I don't think it's really going to last. So that's a look at Coors. So, of course, with silver and gold getting the big pop to the upside that they got, some of the bigger moves on the upside in stocks were in that category. But I got to tell you, they're not exploding to the upside as a group or individually. The best one was Pan American Silver, PAAS, which was up 11% on the week. These still look to me like we're going to get a little bit of a pullback in gold and silver from this big move. And like these things have a little bit of time left to go before they move up. Now, I think the late summer or fall is a time when these things are going to move up, and there's a potential for the final quarter of the year to be a monster for these stocks. Let's take a quick look. This has our colored phasing in there that you could see, and the green phases are positive, the yellow are corrective, and the red are negative. So we've actually been moving up in a negative phase in here, which is pretty unusual. You can see this dotted line over here. That is the major gold cycle, and you can see how it lines up. So in other words, this low right over here lined up with the gold low. This lined up with the gold low right over here. This one lined up a little bit off right there. You can see that. And this low right over here was a little off, and gold is strong and moving up on that. So we think that PAAS is going to pull down for a few weeks right over here, but then explode to the upside, as we think silver and gold are going to get some giant legs and follow Bitcoin in this move against the fiat currencies. That's what I think is essentially happening. So PAAS gets a good upside week, but at 11%, we think it's going to pull back and give us a buying opportunity. AU, Anglo Gold, you can see that looks like it has another couple of weeks to go, but then we think when this bottom comes in that's due right in here, we'll give it maybe 2-3 weeks. Then we think it's going to explode out of that also, and so it's up on the week, though, 6%, and Rand Gold, GOLD, up about 4%. This is a high flyer, and this stock can really move. If gold starts to break out, as we think it will, I think that it's going to fly. Again, you could see we're projecting a couple of weeks down in here and then explosive. What do you think that I believe that this 126 high is going to get taken out sometime in the fourth quarter of this year? That's a pretty bullish statement, isn't it? But I do like that. One more stock we're going to look at in the best for the week. How do you like that? There really is not a whole lot more in here to look at. Is TripAdvisor's. This one is interesting. Priceline gets hammered on its earnings, and TripAdvisor's, the stock fell 6% immediately, but then reversed to the upside on the day, and analysts have lowered the targets in here, several of them, but this stock really wants to bottom. You could see the cyclic action in here. I mean, is that clear to you or not? And this was an important bottoming area. It tried to break down right there. You could see our note right there to our chart subscribers, cycle low support there. If that's broken, broken its negative, but it didn't. It flew on the upside after that, and trying to break down and moving up. We'll call this a kind of a megaphone or reverse triangle bottom going on in here. You could see that right here and then right over here, and that's bullish. So we're going to look for maybe some choppy action in here, but overall we think that this stock is trying to bottom and is likely to do better. So that is a look at the best of the week. Not a lot to look at there, and now we're going to switch over and look at the worst. All right, for the worst of the week, well, just like we said, opposite of what we saw in the best of the week where cores had that monstrous move to the upside, the stocks that are on the downside in a big way are retail. Also, it's a combination of the Amazon giant out there that's essentially killing retail, Walmart that's coming on strong with their online marketing, online sales, and that's also going to be a big problem for retail, and a problem for Amazon too. We talked about that last week when we talked about King Kong meets Godzilla as those two fight it out. But that overall is a bad picture for retail. And we actually saw one of the stocks that's listed on my worst for the year get crushed, and that is JCPenney, as it's down 15% on the day right now, and overall saw down over 20% on the week. This has got some nice cycle analysis on there. We slightly corrected our analysis in here to believe that the next couple of weeks is going to see a temporary bottom, but our target in there is $2. We've been talking about that for the longest period of time, and we think that is going to continue. I mean, just down 24%. It's all about an earnings miss and much worse loss, and I believe that they were in trouble and could not survive this, and I still believe that is the issue. So, between Amazon and Walmart and the consumers being in massive debt situation, that's just not good for retail whatsoever. Take a look at DDS, which is Dillard's, down 17%. They had a surprise loss. Man, would you look at this as this thing turns down. This is a horrible pattern, and this actually projects out to December before this low is done. I would say this is pretty disgusting, and anything that happens in here on the upside, I think, is a plain out sale. You can see that it got this big engulfing pattern. Now, I moved over to the daily for you to see, as if somebody knew that was going to be coming, and a surprise loss. It had positive momentum. It now has lost that, of course, and we think that this is going to be a negative stock for quite a long period of time. Macy's came out and warned, and this stock we were negative on also, and you can see that this warning now moves it down to a new low. It's going below 20. The odds are for another month or so, right around the end of August, beginning of September. And I'll show you that I think the stock market is going to head down into that period also, which is what we have been believing. You could see it tried to get into that resistance zone and then just rolled over and moved sharply to the downside. Take a look at this cyclicality in the daily chart. You can see how it just is perfect. Breaks down big. We're looking for about another week over here, a few days, and then maybe getting a bounce. But then after that, we think that it will be moving to the downside again. When I highlight that there, it says around 919 is likely to be the end of this big downside movement here. So it's probably going to be $18 even at that point. I mean, it's really a bad looking chart. Let's just look at Amazon, because Amazon, we've been warning about this one turning negative, and I showed you that when I showed you the rankings and trade setups table. This is turned into this yellow zone, which is extending down. Our downside target is around 930 on this stock through the end of August, which is not that much, 36 more points, but you could see this downward move that's going on in here. Our warning to our chart subscribers was right in here, where we said that if that minor another cycle low was violated, and it was violated about a week ago, that would be a terrible sign, and then move down, and you had this small triangular bearish triangle shape going on in there. So it has the big break, and we think it's going to continue to move to the downside in here to that area of about 970. So that is a look at a sick retail category. And watch that KORS, KORS, after it's up 23% on the week, start to move down from that level. I'd be surprised if it had much more upside progress. A few more stocks to look at in here. The drillers, they moved to the downside as oil got choppy in here. We believe that these two drillers I'm going to show you that moved down sharply, both Diamond Offshore and Transocean, DONRIG, are down about 9% on the week, but they are in upward phases, and I believe that oil's going to bounce again, and I believe these stocks are long side trades. You can see it's in that green zone right over there and pulling back. So I think that this stock, which traded up here to over 13 and is now 943, will get back over 13 again. RIG, almost the identical pattern. I just don't have the colored phasing in there. As it pulls back here, it hit that 38% number right there on the nose at 966. Pulls down here, was down to about $8. It's $8.37, and I think that it is in a rising phase. You can see our projection right in here as it was rising, and we think it will rise up here to around over $10. So we think that RIG and DO are in good spots to be buying them. So that's a look at a couple of the drillers as energy has just waffled up and down. Take a look at two more stocks in here, NFLX and Disney. These two are related to each other. We've been talking about the fact that we thought Netflix was going to fall kind of sharply in here, and we had a projection of about 164, and that seemed like a long way, but now it's getting really close. So take a look here as it moves down into the top of this support zone, and we expect that into the end of August, there's a lot that goes to the end of August, it's going to trade down to that 164 number. So we're still bearish in Netflix, and worked nicely. What happened here is Disney's pulling out. They're starting their own streaming. So that's why Netflix pulled, and that means they have to create their own good content, which is super expensive for them. Take a look at Disney, which I showed you on our rankings and setups as negative, and you can see in here this is a major violation. We have a low in here due in around November 1st, and we think it's going to hit this 100% fib target around 97 in here. So these are bad patterns that we see here in Netflix and Disney, and we would say that there is a strong likelihood that any rally in there should be sold. And guess what? We're now going to bring you our short-term view of all the markets. All right, so I'm going to make an appeal to you right now once more. We're going to show you all of the work that we give to members. And we're going to do this now on a regular basis because, well, we want to share more with the thousands of people that watch this video every single week. And I'm going to ask you to become a level 2 or level 3 subscriber, or level 4 if you want our charts. Your support is the only way that we can keep this going and keep bringing you all of this incredible information every single week. So I'm really asking you to go in, become a level 2 member. You can take the trial for $16.50 and then be at $33 a month, or take the trial that I talked about in the beginning of the show, because that's what's going to support us, and that's what's really going to be able to help us bring all of this information for a long period of time to you. Right now, all of our members are supporting this and able to bring all of this information to you at no cost that you're going to see right now. So support us. I'm asking you to do that. It's really important. We want to bring this to you for a long period of time. So, okay, now we're going to get into our short-term view for the coming week. for the 5 major markets. We're going to do our projection, talk about how we did last week, and we're even going to look at some momentum studies in here to really get a better understanding of the market. So the first thing we're going to do is we're going to go to the energy market /CL, which is light crude, and look at the daily chart in there. Now, what we had looked at for this week was we're going to say that our analysis was only at about 45%. Now, the North Korea issue really has changed things because the bond market, which was weak, had a flight to safety, and that knocked interest rates down, of course. That made the dollar soft. We thought the dollar would have an up week. It's barely down, but a little bit to the downside. And they were going exactly, the dollar and the euro, in gear up until Friday. So we got, mostly right on that, but then late on Friday, it's thrown it a little off. The gold market, of course, soared as the dollar fell, so we didn't get the gold market right either. But we absolutely nailed the light crude market. We thought it would get down to around $48, $47.90, and the stock market, NASDAQ, the S&P 500, hit our numbers right on the money, which was very, very strong. So we get a lot of credit for that. And now we're going to take a look at light crude and our look for the coming week. So here is our analysis. So what you're looking at in here is cycle analysis. There's been a little change in here. We're going to send new charts to our subscribers as this widened by a little bit. We still think the oil market is bottoming. See, we thought it would come down and test this area around the short-term 38% and make a low at around 47.90. The low today on the downside was 47.98. So we were really good on that one. For the next week, we actually expect it might give just a little ground early in the week, but you could see we're projecting a rally in here. So there's 2 projections. It's the small one and a little pullback for the week. So we're looking for basically this pattern in here, up and then come down a little bit. We think we're going to test this area on the upside. That's in this minor resistance in light crude, right around 49.5. That would be our upside projection right there. And we have light crude, and let's just switch over here, and you could see this is our momentum indicator. And when we're looking at this momentum indicator, the slim ribbon, when it's green, and when you're oversold in here on the projection oscillator, the odds are pretty good you're going to get a rally. So we're playing those odds, and we're playing the odds on this cycle that's turning up. One more thing we want to look at, because a lot of our members have gotten a trade set up from us on gasoline, is that this seems like it just pushed down an extra day in here also, and then you can see has reversed to the upside. So it's pretty much acting as we expected, and you can see in here that the short-term momentum is also still green and turning up off of an oversold condition. So we're really looking for upside markets there in the energy markets in the coming week. So now we're going to switch over and look at the dollar and the euro currency. Of course, the dollar and the euro, they are they move opposite each other inversely, because the euro currency is about 57% of the dollar index market. Now, we were looking for a rally in the dollar this week, but then those interest rates falling have gotten in the way. We thought a bottom had formed in here, and you could see we're still off of that bottom at 92.54, but not that much off of it, and it was moving up all week long until this it just rolled over, and in really an extreme way here on Friday. So we're looking for a small upside. We think it's going to test this area up around here in the dollar at this around 93.80, 93.90. So we think it's going to pop back up in here. You can see that there, but it's going to be really hard to make a lot of ground. This cycle pattern in here that you could see projected, That's really the bigger pattern in there, and if it wanted to, it could get up here to 94.70, but we just don't see that kind of strength coming in here. Ultimately, it might. So 93.90 is our target, again, up to that level right there for the week. You can see in here when we look at this that it's getting a little oversold, but I want you to see the negative momentum in here as the slim ribbon has kept you either negative or neutral. Look at how negative these have been. So it has been just perfect in here, and we're getting a little bit oversold, but the way that this works is that when you're red and get overbought, you move down again. Red and overbought and move down again, and you could see how that works. So these are fantastic looking momentum indicators, and the dollar is still extraordinarily weak. And the other side of that is the euro, which is still very strong. You can see that. And these are just great momentum indicators. What we're looking for in the euro is a pullback in here. We think it'll fall down to about 116.50 area. This is 117.05 first, then 116.50. We think that's over the next week as the dollar gets a little bit more buying coming in. But overall, we think that the rallies will be minor in the dollar, the sell-offs in the euro minor, and the euro has a potential for later on in the year or in the fall time, we think, to move sharply up again, as we think the dollar is going to have a lot of problems. So that's a little bit bigger picture. Let's take a look at the gold and silver market here. /GC we're going to look at, and the gold got much stronger than we expected as the dollar got weaker here and the flight to safety came. The bigger picture in the dollar is turning super strong, and the fact that we're gotten this close to these cycle peak resistances is big. That's when I look at these smaller patterns, you could see this in here, that this downturn in here brought these lows. This downturn in here says maybe you're going to fall a few days. We're looking for a minor decline. Test this area in here, which we think is a buy zone in gold, between 1273 and 1277. And then we think there's a risk to explosion on the upside after that. So minor down in the gold market. We wouldn't be surprised if it actually finished on the downside. Look at this powerful upside momentum going on in here. And while we have that and slightly overbought right over here, well, we're going to look for a little bit of a pullback in here. Now, silver is at a really extreme situation where it's getting overbought also, and we kind of think that it's going to have a pullback also. But the real extreme is in platinum, which we think is going to have a pullback. It's just crazy, which is probably going to lead this little correction. Silver, we're looking for a move down here to about 1670 to about 1655, right in there. So we're going to look for a minor downside in there, but you could see the strengthening momentum when you look at that. And just for a quick look at platinum, you can see our option bias warning right in here, as we show you right in here that this warning is what our members see. That actually is let me just move that over so you can see where that belongs. There it is right there. And so on 8/11, we got this warning of a pending pullback, and we think that that's going to lead the correction in gold and silver. So we're looking for minor down weeks in here in the gold and silver market. Here's your platinum. You could see just a lot of strength in there in momentum, and we're always considering momentum when we look at these things, and that's what we want. Right now, a contrarian picture for a minor pullback in this group, but we think that after that minor pullback, which we think is a buying opportunity, it could be very explosive on the upside. The bond market, again, we got that one wrong because the flight to safety came in. We think the bond market is going to have a down week also, just following some of these flight to safety moves that it's going to be likely giving up. Here you could see in here as this North Korea fire and fury news came out, and we got this big jump to the upside. This points to a pullback in here. We're going to look for A move in the ZNs down to about 126.02. That's this beginning of this support zone. Potentially down here to about 125.27. That's the bottom of the support zone. But we're just looking for a modest pullback in here this week. In there, you can see in here the bond market. Look how strong that is. And these momentum indicators are just fabulous. So if you don't have them, you're going to want to ask me how to get them. And here is the bond of the ZBs. You could see that still strong also. And again, we're looking for a pullback in here in the week. We're going to look for it to pull back to about 154.05, maybe a little bit lower in here. As you could see that it's kind of stalling in here on Friday. So still very, very strong when we look at that. So that's a look at the bond market. Now we're going to take a look at the stock market, and the Russell has gotten extreme oversold right now. And before I show you the charts, that says to me that we're getting a bounce today in Apple, and the NASDAQ is coming up, and the Russell's not doing a whole lot. It says to me that it's probably time to be long Russell, IWM, and or short S&P, SPY, or QQQ. It seems like that's setting up right now for those that are pair traders. So that's kind of what we do, is look for opportunities for pair trades in indexes or in the knob spread or in energies even sometimes. So take a look here as we look at the S&P 500 SPX. Now this is a slight adjustment for my chart subscribers. We're going to send out the new futures charts this weekend with some updates on them. So we have been looking for this decline. We've been talking about periods of extreme risk to the downside, and especially being in August into September, and you could see how we have this projected. Now this is slightly different than we have had it. We thought that it would go fall until about Thursday of this week. We did that, but it actually projects out to potentially into Monday. So we might get another pullback Monday or into Tuesday and then get a bounce. So this is that bond market decline we're looking for, or gold market decline, is this period of bounce in here. But this, again, is a period of extreme risk out over here. And late August is what we've been talking about. You can see that bottom that it's pointing to over there, and we think that could easily be the 5% correction that everybody says can't happen. So you can see that in there. NDX, we'll look at that one right in here, and you can see it hits our number right here. We actually said this week that our target on the downside was 57.87. It got down over here to 57.82 approximately, and then got the bounce. You can see we're projecting it out into the end of August or beginning of September to continue on the downside. So if we look at the Russell RUT, this is important. In that we got extreme oversold right over here. So the probability is pretty good that this is going to overperform, even though we think markets are going to fall. So that's why we say that, maybe it's time to be long Russell and short the other indexes. Have a sense that that might work. Look at here now. Look at how the Russell turned into negative momentum over here on 8.3. You can see that right over there. As it lost its positive momentum over here on 8/1, August 1. So if you look at the S&P 500, you could see it just is going to neutral over here. So the Russell absolutely led on the downside, and the NASDAQ and the X, you could see that's just losing it. So you better believe this is going to go to negative momentum, and that's why we think also that there is more downside in there. But you could see the weakness in this Russell, and when you look over here, you could see that that Russell projection is also out towards the end of the month, but we just don't think it's going to be as bad. That's all. We think that the greater percentage is that it had given up a lot already, and that it will overperform. Take a look at the Dow Jones Transportations. You could see that in here, as it's moved down from 97.63 all the way down to 92.23, that is a more than 5% decline in there. So you could see that it's been very weak, and you could see in here that was our projection on that mega telephone top, and it has continued to move to the downside. So all of these projections really good, and the stock market did a lot of what we said it was going to do this week. Take a look at now one more thing at the VIX. And we're going to switch over to the daily chart on the VIX. You can see the VIX, we talked about it exploding over 15. It actually got up to 1723. Remember that we're looking for the stock market to have a bounce in coming days right in here. And that would then get you a little more pullback in here, but then we think it's going to explode again. I wouldn't be surprised to see plus 20 or even 30 in the VIX before this corrective period is over with. So we think any pullback here in implied volatility is only going to be a temporary thing. Man, we covered a lot in here. I hope you found the change in our format valuable and easier, and it kind of reduced it. Other than us spending 8 minutes on introducing level 3, the show is going to go from about an hour down to about 35 or 40 minutes based on these changes, including now showing you all 5 major markets on the short term. So today was kind of the transitionary day. Support us by becoming a YouTube member. Follow us on there, follow us on Twitter, and become a level 2, 3, or 4 member and support us and the staff so we can continue to bring you all of this analysis and me share 43 years of my knowledge with you. I only care about making you a better trader, bringing you more success, and being able to keep this going because our strong follower base encourages that to happen. That's it. I want you to be really careful because it is crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been